Hi, today I wanted to discuss and debunk 5 different myths about the home buying process. And I'm going to start with probably the number one myth that's been out there for a long time. And that myth is that you have to have 20% down. That is totally false, totally incorrect. You do not have to have that much down payment. If you're able to come in with that kind of a down payment, yes, it's going to be beneficial in that you're borrowing less money. You're not going to have mortgage insurance, et cetera, on there. And so therefore you're going to have a lower monthly payment if you're able to do 20%. But by all means, don't sit there and think I have to save up 20% before I can buy a home. And that's going to take me several years to get there. Conventional, if you're a first-time home buyer, will allow for as little as 3% down. If you're not a first-time home buyer, conventional still allows for 5% down. FHA, for example, allows 3.5%. And then you have USDA and VA, both which you could get a potential 0 down, assuming you qualify, assuming you have your full eligibility with regards to VA. So definitely don't have to have 20%. It's far less. And feel free to reach out and discuss those options. Another myth is that you have to have perfect credit. Perfect credit is not a requirement. In fact, there's many loans we can do with lower credit scores all the time. And so don't feel you have to have perfect credit. The better your credit score is, the better the terms you're going to get, the better interest rate, et cetera. But you don't have to have perfect credit. And in fact, if you have issues with your credit, sometimes it's just little tweaks that you need to do. Maybe you need to pay down a credit card a little bit and it'll pull your score up sometimes 10, 20 points. So oftentimes when we meet with a client, that's one of the things we discuss. We look at that. And if we see your credit score is, say, at 580, and we can get you a loan at 580, but if you just pay down this one credit card by a couple $100, all of a sudden your credit score is up over 600. At 600, you're going to get better terms than at 580. So we'll advise you on how you can do that and save and get better terms. Yet another myth that's out there has to do with the fact that buying is more expensive than renting. And it's going to really depend on what's going on in the location you're located, what's going on with interest rates, et cetera. So it's often true that owning can be more expensive than renting, but it's also true that owning can be cheaper than renting. It's just going to depend on those previous things that I discussed, rates, locations, et cetera. I'll even take it a step further and say that, let's just say, for example, owning a home is more expensive than renting, and it's going to be $100 or $150 more a month to own a home versus renting a home. My personal opinion, that's still better for you to try and own the home, because when you own the home and you're making those payments, even though it's a little bit more, now you're the one building the equity. You're the one building the wealth. If you're renting, you're just making your landlord more rich. You're not helping yourself. You're not helping your financial picture, your wealth, et cetera. So if it's slightly more, that still can be beneficial to try and buy. Yet another myth that's out there has to do with the fact that home prices are always going to go up. And we can look back to 2008 and know that's a myth, right? In other words, prices went down considerably during 2008, during the housing crisis. And while we haven't really experienced any kind of a downturn like that since, it doesn't mean that there can't be corrections that happen in the market. In fact, corrections happen all the time. And corrections are just slight downward, and then maybe it regains and goes back up. But when you look at it historically, over time, owning a home usually equates to 3 to 5% per year in appreciation. And again, that's the long game here, not the short game. Another myth, the final myth I'm going to discuss today, is you should always buy the maximum home that you are eligible for, that you qualify for, I should say. Again, I think this is dangerous. You don't necessarily want to push your maximum. In fact, I oftentimes will discuss with clients What are you comfortable with as far as your payment? What are you comfortable with as far as your cash to close? And here's where you qualify from a payment perspective. And usually there is a difference. And as I explained to many of my buyers, what'll happen is oftentimes you end up somewhere in between. So let's just say you're comfortable in $2,500 a month, you qualify for $3,500 a month, you might end up at around $3,000 a month to get the home that you're looking for and feel like, okay, this is worth my investment. This is worth stretching just a little bit, but you're not necessarily stretching all the way to that 3,500. You always want to give yourself a little bit of cushion. Make sure you've got an emergency fund. You've got some backup. You're not putting everything into the house. You're not living for the house. Okay. So listen, I hope you found this information really helpful. If you did, please do me a favor and subscribe to our channel here. And then of course, if you have any questions on anything we've discussed today, if you want to talk about getting pre-qualified, pre-approved, please feel free to reach out. You can call us, text us, always available to answer your questions. We look forward to hearing from you soon. Have a great day. Bye-bye.